What's going on, everybody, and welcome to the video. In this one, we're talking about ticker CREX, Creative Realities, a very small company, like a $13.5 million company. And I do see a lot of potential in this. They're making great contributions to the company, great innovations, and a lot of good things are coming out. So we're going to be talking about why I do think this company could be a good add to your portfolio. But remember, this is a penny stock. It is very risky. It's a small company. The larger majority of these types of stocks do fail. I just do want to point that out. But if you're new to the channel, make sure to subscribe and turn on post notifications so you do not miss out on any of my future content. Let's go ahead and just get straight into the video. So the stock right now trades for 62 cents, and we're looking at the daily chart. This is a very volatile stock. Like, if I just kind of zoom out and show you everything, this is a very volatile stock, on a big downtrend, just as most penny stocks and growth stocks in general have been over the past year. Been trading pretty horizontally, over since about September, the end of September, trading within this range, about 67 cents to 56 cents, pretty much in the middle right now. MACD looking pretty medium, looks like we're about to fall down, but this is just some short-term stuff, and this is one of those companies that, if it does play out well, could be a massive gainer just relative to how small the company is and how much market share they could take in this market. So as I said, the stock is a $13.5 million company. Over the past week, it's up about 1%. Past month, up 3.3%. In the past 6 months, down 3.3%. But you can just see the volatility. It does change in price all the time. So let me show you a few key things from FinViz before I go into what this company does. But they have a PE of about 10.33, which is very, very good, especially in the market that they're in. Their total float is only 18.4 million shares, which is very small. This is why it's likely very volatile. Has a target price right now sitting at $2.12 from its 62-cent price, so it is a high price target. Earnings per share this year increased by 101%, and sales quarter over quarter this year increased by 133%. So let's go ahead and talk about some key factors. First up, who is this company? So Creative Realities, together with its subsidiaries, provides digital marketing technology and solutions to retail companies, individual retail brands, enterprises, and organizations in the United States and internationally. So they do a ton of online marketing for, digital out-of-home companies that need this targeted marketing and different things like that. They have a ton of things, point-of-sale transactions, beaconing, web-based media, a lot of marketing. And this is a big market for this now, especially in today's world with social media and companies, using targeting marketing. I kind of feel like even though they say they don't, they still do to a certain extent with the use of cookies and things like that. So this is a company that has a huge potential to grow market share in this growing market. We help clients use the latest technology to inspire. This is their website. I will say it is a little suspicious just on the sense that it's a smaller company, things like that. You kind of look at things. I was looking at their investor relations and it said, look at our most recent presentation. I clicked on it and it took me to a PDF of one blank page. So it is kind of a red flag, looking at their website, the images don't show. You can kind of click on them. Nothing really happens. So that is something to keep in mind. This is a company that does need work, but if this work can be perfectly executed, it's a very good thing. Now, I would not say their website is going to be the number one indicator of whether or not I buy or sell a stock, but it is something to keep in mind. So the first big catalyst I want to talk about, and this is from a month ago, but they secured $2 million in funding to enhance and expand their industry-leading automotive software support platform. So pretty much they got $2 million to take their company and put it into R&D to expand their software as a service revenues associated with an existing customer by up to $5 million annually. So they believe this $2 million loan can help them kind of leverage and get to up to about $5 million annually in subscription revenue beginning in 2024. The loan does have an interest rate of 12.5%, which is very, very high. So keep that in mind, and it matures on September 1st of 2023. But this is going to be a very big thing if this company can follow through with it. And another thing is the advertising solution platform is now delivering 1 billion ads per month. That's per month. That's not per year. 1 billion ads per month. That's 12 billion per year, empowering over 75,000 screens. That's a huge thing. And from the CEO, given the diverse needs of digital out-of-home markets, Creative Realities is uniquely positioned to meet a growing need in providing precise and consistent delivery of targeted ads. So this is a very good thing to see, especially with a company like this being so small. As I did want to point out also in the FinViz, we can see their sales is about 38.3 million with a market cap of about 13.13 million. That's very good. And the net income is about 1.5 million over the past year. This is a very solid company, just looking at the fundamentals alone. But remember, these are very risky. They still have a negative operating margin and things like that. But let's go ahead and show you some more things about this company. So their most recent earnings, first up, the first thing I want to point out was looking ahead, revenue is forecast to grow by 21% per year for this company compared to the 3.4% growth forecast for the media industry in the United States. So that does show they have something going well for them, especially with it being a smaller company. This is the often good time that you get in on a smaller company and you watch it grow as they take market share in a market that they're entering and still dominating, looking to dominate at least. So a few key results from their third quarter was record revenue of 11.2 million in the third quarter. 2022 revenue guidance was exceeded of their 43 million, so they exceeded their past guidance. They increased their 2023 guidance to at least 54 million, and their 2023 EBITDA expectance is about 15%. So they've had great numbers. They increased their quarter to quarter by 135% in sales. Now, the company's run rate on annual recurring revenue is at a level of 14.5 million, on track for 25% growth. The recurring revenue is a very big number, especially with this being bigger than the current market cap. That is very solid information. As we look forward to 2023, we're excited to announce revenue target of at least 54 million with EBITDA about 15%, very solid numbers. So showing you a few things is this company did take a net loss of about $600,000 this quarter. The past quarter I believe was 1.2 million in net income, and the past one before that was 1.5 million in net income. So they do still have a positive number for 2022. But sales and marketing expenses increased to about 388,000, 118%, which is a big increase. And then G&A expenses increased 999,000, 54%. They did have a merger, so they did add a ton of people onto their team, which did kind of go through with this. And then they have $186 to ERC. So this is something that is very, very solid. But, kind of going through with this, it's something that they have to deal with being a smaller company, with mergers, and they're going to have to increase expenses, but they are looking on track to keep these down. Net loss was 0.6 million. EBITDA was 1.5 million, adjusted was 1.2 million. So giving them a margin of about 11.2% during the third quarter. Very, very solid. Another thing I wanted to point out about this company was this company right here. I believe it is Simply Wall Street. That's what it was. They went through, they made a DCF model for the company, went through a ton of different stuff. We're not going to talk about all these formulas, but compared to what they got with the DCF, they're saying that the stock is currently undervalued by about 27%, giving a fair value of about 82 cents per share. So that is a good thing to see, looking at just the value indicators and different things like that, the fundamentals. And lastly, what I want to talk about the stock is the inflow to outflow from institutions. Over the past year, we're seeing a lot more inflow, 606,000 compared to 94,000 in outflow. Very good. Past 2 quarters, we've only seen money being poured into the company and nothing being sold. So there is definitely a good indicator seeing institutions buying the stock. But everybody, that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. Thank you for making it to the end of this one, and I will see you at the next video.